Okay. So continuation of our discussion with receivable financing. So we're already bound to discuss discounting. So before we proceed with discounting, let me have a recap with the first three receivable financing type. We have pledging, assignment, and factoring of accounts receivable. Now, we have discussed about pledging and assignment, which do not involve the transfer of ownership or the risks and reward over the receivable subject to assignment or pledge. Rather, the company still collects the accounts receivable, usually collects the accounts receivable, then make payments of the liability or the loan to the lending company. So again, assignment and pledging do not involve a transfer of ownership or the risks and rewards in collecting those receivables. While factoring, we have discussed yesterday about factoring that it involves transfer of ownership. So upon the date of transaction, there's already a change in the value of or value or in the balance of total assets and total receivables because of absolute sale. Meaning there is transfer of ownership and there's transfer of risks and rewards. Um, risk and rewards in collecting the accounts receivable or the receivables. Now, with factoring, by way of absolute sale, that means uh, the selling company is already relieved of the responsibility of collecting the accounts receivable. Now, we move forward with the next type of receivable financing, which is the discounting. Now, discounting is defined as receivable financing that involves disposing the accounts receivable, disposing the notes receivable in a way that current holder of the promissory note endorses it to a third party. Now, the pledging, assignment, and factoring, the similarities of those first three receivable financing type is that it involves the accounts receivable. While discounting, it is solely related to uh, notes receivable. Discounting is solely related to notes receivable. Discounting again is defined as it involves disposing the notes receivable in a way that the current holder of the promissory note endorses the same to a third party. So how do we illustrate discounting? So ganito yung discounting, guys. From the maker to the payee or the original recipient of the promissory note, wala pang discounting na nangyayari dyan. Okay? It is a normal transaction between the maker and the payee, meaning it is the original transaction. The maker being the original endorser, but maker will retain the term maker for the one who issues the promissory note. Then payee is the original recipient of the promissory note, but will retain the term payee if we're going to refer the transaction between the maker and the payee. So kindly follow lang the sequence because there is a numbering. There are numberings naman. So from maker, the maker issues the promissory note to the payee. So that's a normal transaction. Meaning the maker upon issuing the promissory note, the maker is recognizing or promising that he's going to pay a certain sum of money to the payee upon maturity. When does discounting start? Discounting start when the payee, before the maturity of the promissory note, the payee or the original recipient decides to reissue or endorse the promissory note to a third party. So si payee now will become the subsequent endorser. Being an endorser, the payee will endorse the promissory note to a third party, which will become the subsequent holder of the promissory note. The transaction between payee and third party will now be called or um, more probably will be treated as a transaction of discounting of promissory notes. The only thing for discounting of promissory notes is that payee is somewhat um, impatient. Payee is no longer waiting for the maturity date before generating additional cash inflows. So when the payee is in dire need of the of additional cash flows, what will the payee do is to discount, okay? Discount the promissory note by endorsing it to a third party. So yan ha, discounting starts when the payee, the original recipient, which will become the subsequent holder, a subsequent endorser rather, will issue by endorsement. Okay, will discount by endorsement the promissory note to a third party. Yan yung basic ng discounting natin. By the way, guys, able to catch up? Kindly raise hand. Init. Wait lang, guys, ha. Okay. So we move forward. Okay, to continue. Discounting may either be under a with recourse or without recourse agreement. We're going to differentiate later on what does it mean by with recourse and without recourse. We're going to differentiate the two. Now, for problem solving purposes and for discussion purposes, if a problem does not provide as to the assumption of the discounting, we always assume it is with recourse. Okay? It is always with recourse. So, when we say with recourse, okay, when we say the discounting is with recourse, the third party can run after the endorser for the settlement of the maturity value of the promissory note if the maker dishonors the promissory note upon maturity. What does it mean with recourse is that the the third party, yung kanina, yung subsequent holder, if the promissory note was dishonored by the maker, when we say guys dishonored, the maker denied for payment or the maker did not pay upon maturity the promissory note. So what the third party will do is to run after the immediate endorser, which is kanina is the payee. So under with recourse discounting, the endorser is required to set up an accounts receivable should the promissory note become uh, has been dishonored. So here's an illustration. Okay, here's an illustration. So kindly follow lang the sequence. So from the maker issues the promissory note to the payee. Between the transaction, payee will become the original recipient of the promissory note. If we're going to stop to payee, the normal transaction will be after within upon reaching the maturity date, the payee will go back to the maker to ask for payment. Yun yung normal. So therefore, it is always assumed that payee has the recourse to maker. Kasi silang dalawa naman yung nag-contract or nagkontrata. Now, from payee, when the payee decides to discount the promissory note and no longer waits for the tawag nun, maturity value, maturity date of the promissory note, the payee will subsequently endorse the promissory note to a third party. So, yun yung pangalawa. So, the second issuance or second endorsement, that discounting occurs. What will the third party do when it comes for the maturity of the promissory note? The third party will not go directly to payee. What will the third party will do is to go directly to the maker, because in fact it is the maker's name is in what is in the promissory note. Okay, again, the third party will go to the maker because in the first place, what is in the promissory note is the name of the maker. The maker is the signatory on that promissory note. Now, the third party will ask for payment. Then the maker can dishonor or may dishonor that promissory note upon maturity. Under a with recourse agreement, should dishonor happens, the third party will go back to the immediate endorser, which is the payee. Kay payee siya sisingil. Okay? Then of course, payee cannot deny for payment because the note has been dishonored. So will the payee or the subsequent endorser will pay the third party. So it is as if walang kwenta ang discounting. Kasi nga, payee at the end of the day did not benefit on the discounting. The purpose of payee, why the payee discounts the promissory note, is to generate cash flows, which is a benefit for the payee. But because at the end of the day, nagbayad pa rin si payee kay third party because of the dishonor of promissory note by the maker, yung gagawin ni payee, sige, bayaran na lang kita third party, total, pwede ko pa namang habulin si maker. Yun yung concept ng with recourse. Parang ganito, in summary, mag-i-issue si maker kay payee. Si payee magbe-benefit ng cash through issuance of the promissory note or endorsement of the promissory note to the third party. The third party, if na dishonor, babalikan si payee. Then si payee, babalikan si maker. Okay? Nahabol ako guys. Kindly raise hand. Ay ko. Wait lang guys, pinagpapawisan ako.
Ayan. Guys, naririnig ba ako?
Yes.
Okay. Tinanggal ko lang muna yung yung headset, yung headphone. Init. Sige. So yan yung with recourse agreement natin. So I hope nag-gets ako sa explanation ko sa with recourse na yan. Actually, medyo mahirap ang understanding or in-depth yung understanding sana sa with recourse, but I decide to explain it parang ano talaga, a very light explanation, yung pinaka-simple na lang. Kasi technical yung explanation kasi dito eh. A law subject will discuss for promissory note. Okay? Because promissory note is under a law that discusses the negotiable instrument. Promissory note is a negotiable instrument. But nonetheless, we move forward. Discounting with recourse could either be under conditional sale agreement or secured borrowing agreement or assumption. Okay? So take note. With recourse, discounting is either under conditional sale or secured borrowing. So yan. From being first concept, discounting, then discounting will be assumed either with recourse or without recourse. Then with recourse will be assumed further either conditional sale or secured borrowing. So to differentiate conditional sale and secured borrowing, we say that the discounting with recourse is a conditional sale when the endorser acknowledges a contingent obligation. Right? The endorser acknowledges a contingent obligation. By that, the endorser discloses a contingent liability to notes to financial in the notes to financial statement. Okay? And it may involve recognition of loss on discounting. What does it mean by acknowledging contingent obligation or disclosing contingent liability in the notes to financial statement? Balikan natin yung illustration. Yan. So, di ba, discounting will start from the payee endorsing the promissory note to a third party. Now, when it comes to conditional sale, okay, it is a conditional sale, the payee or the subsequent endorser is going to anticipate obligation should the maker dishonor the promissory note. Kung baga, yung iisipin ni payee, sasabihin ni payee, naku, hindi na ako yung may hawak ng promissory note. In-endorse ko na yung promissory note. Baka, upon maturity, okay, upon maturing of the promissory note, baka humingi ng payment si third party kay maker. Paano kaya kung i-dishonor ni maker? So sige, kung i-dishonor ni maker, pwede akong habulin ulit or pwedeng pumunta sa akin si third party para singilin ako for payment. I am willing to pay. Okay? In fact, pag siningil niya ako, pwede ko namang singilin ulit si maker. Nagagets ako, guys? Ulit. Si payee, diniscount niya yung promissory note. By conditional sale, si payee magre-recognize ng contingent obligation, mag-a-anticipate siya kagad. Sasabihin niya, sige, si third party baka hindi bayaran ni maker. Si maker kasi baka i-dishonor niya ang promissory note upon maturity date. So yung gagawin ko, okay, I will allow the third party to run after me for the payment. Okay? Yung mangyayari, babayaran ni payee si third party, then afterwards, si payee babalik kay maker for the payment. Yun yung conditional sale. You anticipate na meron ka pa ring obligation. Nagets na ako, guys? Next, for secured borrowing, The endorser acknowledges actual obligation. By acknowledging actual obligation, the endorser set up a provision. This time, not disclose but set up a provision or a liability account in the statement of financial position. And instead of recognizing a loss on discounting, under secured borrowing, the endorser will recognize interest expense. So how do we differentiate? Conditional sale, contingent obligation, while secured borrowing, actual obligation. Conditional sale, contingent liability disclosure, while secured borrowing, setting up of liability account. Conditional sale, loss on discounting, while secured borrowing, interest expense. Okay? Interest expense. Next, we have discounting without recourse. The only difference of discounting without recourse is that third party cannot run after the endorser. Upon settlement of for the settlement of the maturity value, should the maker dishonor the promissory note upon maturity. So if we're going to illustrate without recourse, upon discounting, when the third party seeks for the payment, should the maker dishonor the promissory note, the third party could no longer run after the payee for the payment of the maturity value. The scenario here is both win-win situation for maker and payee, but a loss situation for third party. Reason, when the maker recognizes an obligation to pay the payee, it has been held due to payee endorsing the promissory note to a third party. The payee has a win-win situation because the payee no longer waits for the maturity date of the promissory note but able to receive cash out of discounting. Okay, naka-receive siya ng cash. However, si third party, upon seeking payment or asking payment kay maker, the maker may dishonor the promissory note, which will become a win-win situation kay maker. So therefore, under without recourse agreement, third party always has the losing situation. In short, hindi siya mababayaran kapag without recourse. In Tagalog, kawawa siya. Kung baga, goodbye lahat si third party. Na thank you siya. Yan yung ibig sabihin lang ng without recourse. Pero kung i-compare earlier with recourse, si third party pwedeng balikan si payee pwedeng balikan si maker. Pero dito si maker na-relieve ng obligation kasi the dishonor niya. Hindi siya magbabayad, pero hindi rin si third party mababayaran kasi nga without recourse pagpunta kay payee. So without recourse agreement na discounting is considered an absolute sale. Pag sinabi natin absolute sale, I am relieved of everything including the responsibility to collect the notes receivable. Therefore, there is a transfer of ownership and or the risks and rewards over the promissory note. Since without recourse is an absolute sale of promissory note, no contingent liability or a provision will be recognized to financial statement. And the same with conditional sale, it may involve recognizing loss on discounting. Okay? So let us have this problem. Loud Company received a promissory note from Clear Company for merchandise sold amounting to 3,500,000. Therefore, the value of the promissory note received is equivalent to the amount of the merchandise sold. That is 3,055,000. Dated January 1, 2019. The date of the promissory note is January 1, 2019. Bearing 12% annual interest rate maturing on December 31, 2019. So therefore, the promissory note is a short-term promissory note and only has 1 year maturity period. Okay? Then the note is considered as interest bearing. When we say interest bearing, the clue is bearing 12% annual interest rate. Then on May 31, 2019, the company decided to discount the note with savings bank to obtain additional funding. The discount rate effective of the bank is at 14%. Use 30-day month counting. When we say use 30-day month counting, we're going to assume that all months have 30 days. So from January to December 31, we're going to assume that each month has 30 days only. Yun yung ibig sabihin ng use 30-day month counting. So therefore, in a year, we only have 30 times 12, 360 days. Although in actual counting of the days in a year, it is either 365 or 366. Tama ba? At most, 365. Kasi nga, usual naman yung 365 na counting. Okay? So requirement, compute the net cash proceeds from note discounting. Then for number 2, 3, and 4, compute the loss on note discounting assuming without recourse, conditional sale, or secured borrowing. So how do we solve? Let's start with the face value of 3,055,000. So ito. Then since the promissory note is an interest-bearing promissory note, we add total interest applicable to the promissory note from January 1 up to December maturity. Okay? So total interest, that should be 3,055,000 times 12% times 360 days over 360 days. Why 360 over 360? Because the total interest will be counted or will be computed from the date of the transaction up to the date of maturity. In the problem, our transaction date is January 1, which is also the date of the promissory note, and on December 31. So therefore, 360 over 360. Or if you want it in a more easier understanding, you can have it 12 over 12. 12 months over 12 months. Then add, our total interest is 366,600. Then add it to the face value of the promissory note. The maturity value of the promissory note will equal to 3,421,600. Now, should Loud Company have waited the maturity period, the company will receive 3,421,600. But because Loud Company became impatient because it's in dire need of cash flow, yung ginawa niya, diniscount niya sa May 31. Okay, diniscount niya sa May 31. Therefore, yung computation ng ating discount will be the maturity value times 14%. 14% will be our discount rate effective for the bank. Yan. So itong 14% yung gagamitin. So 3,421,600 times 12% multiplied by the number of months or days covered. If we're going to use days, okay, if we're going to use number of days, count from May, we're going to, since May is already a complete month, we're going to start with June. So June, full month of June, full month of July, August, September, October, November, December. So that is equivalent to 12 months, so 7 months. 7 months times 30 days, we have 210 days. Kaya 210 dito. Again, we assume every month to have 30 days. Okay, assuming all months have 30 days. Then over 360. Or if you want, you can have it times 14%, then times 7 over 12. We can still arrive at 279,431. Then get the difference, we can have now the net cash proceeds. The 3,142,169. Should Loud Company waited the maturity date, makaka-receive sana ng 3,421,600. Kaso nga lang, diniscountan niya, March 31 pa lang, hindi pa sagad sa maturity, yung na-receive lang niya out of discounting is 3,142,169. Then this net cash proceed, compare it with the carrying value of the notes receivable. Since we are referring to an interest-bearing promissory note, how do we compute the carrying value is to add to the face value of 3,055,000 the accrued interest. How do we determine the accrued interest? From January 1, 2019 to May 31, there is a passage of time that is equivalent to January, February, March, April, May. So that is equivalent to 5 months. That means we have a 5-month accrual of interest. Okay? 5-month accrual of interest. So therefore, the computation, 5 months times 30 days, we have 150 days as numerator. Then over 360 days. Or if you want, you can have 5 over 12. So 3,055,000 times 12% times 150 over 360 or times 5 over 12. We can still arrive with accrued interest of 152,750. Then add the two, we can have the carrying value of the promissory note as 3,207,750. Now the difference will be treated as a loss. Why did we say it as a loss? Because we received more than what we have disposed. Okay? Or we disposed 3,207,750 but we received only 3,142,169. Okay? So how do we journalize? Under absolute sale or casual sale, which is without recourse assumption, we debit cash by the amount of the net cash proceeds, which is 3,142,169. We debit the difference as a loss on discounting, 65,581. We credit notes receivable by the face amount of 3,055,000. Then we credit interest income. Why interest income? Even though it is yet as accrued interest, since we are going to receive net cash proceeds out of this one, out of discounting, we're already disposing the notes receivable, we can consider this accrued interest as earned already. That's why we credit directly to interest income. Okay? Credit interest income of 152,750. The same amounts and almost the same amounts and accounts that we're going to credit to use rather under conditional sale. We still have the same debit to cash. We still have a debit to loss on discounting. Then we have a credit of interest income. What will only differ is that under conditional sale, we could add something after the notes receivable. So we can say notes receivable discounted. Or some books will present it as notes receivable lang. Then there is a designation as discounted. Ilalagay nila as parenthesis. Okay? Then that credit to notes receivable discounted will be disclosed. It will not be presented in the balance sheet, but it will only be disclosed to the notes to financial statement as contingent liability. Okay? Makikita lang ang notes receivable discounted na yan, okay, sa journal entries, but not on the FS. Kasi nga, we do not present an account for a contingent liability. Okay? So therefore, yung notes receivable hindi pa natatanggal sa FS. Si notes receivable account pa yung nasa FS kapag conditional sale. Kasi dito, sa absolute sale, actual notes receivable talaga yung na-credit. But this time here, notes receivable discounted. This is a different account. Okay? Although the amount is still the same, because we are recognizing that we're still going to pay the face amount plus the interest. Okay? So yan. The same with absolute sale, we're going also to recognize loss on discounting. When do we say again that we recognize discounting? Because of the term sale. Absolute or casual sale, we have a loss. Conditional sale is also a sale, so we recognize a loss. Okay? The only difference again is on the credit to notes receivable discounted contingent liability account. Okay? Next, for secured borrowing, under a secured borrowing, instead of debiting to loss, the 65,581 will be debited to interest expense. Reason, kasi nga yung term borrowing. And the basic concepts of borrowing, we recognize interest rather than a loss. Kapag sale, absolute man or conditional, loss. Pero kapag secured borrowing, interest expense. So pag tinanong, loss on discounting under absolute sale, 65,581. Under conditional sale, 65,581. But under secured borrowing, 0. Under secured borrowing, 0. Reason, because the difference is not debited to a loss on discounting account, but to an interest expense. Okay? Interest expense. Kindly raise hand if nahabol ako hanggang dyan. Okay. Now, in addition to these journal entries, especially to conditional sale and secured borrowing, what if we have the assumption of dishonor of promissory note? Okay? It's okay. So for absolute sale and casual sale, whether the maker pays upon maturity or dishonors the note upon maturity, we no longer have a journal entry. Again, reason for the no journal entry upon paying or dishonor of the maker upon maturity date kasi nga hindi na tayo nagre-recognize ng notes receivable. Ni-remove na yung notes receivable from the records, therefore we are relieved of the responsibility to collect the notes receivable. Magkakaroon lang tayo ng journal entry under the assumption of when the maker pays or when the maker dishonors kapag yung assumption natin ay conditional sale and secured borrowing. Now let us say, for example, under conditional sale, Loud Company was charged by Savings Bank for 10,400 protest fee in addition to the maturity value of 3,421,600. Now, this is in the assumption that the promissory note was dishonored. Assuming the promissory note was not dishonored upon maturity, therefore the maker pays the promissory note upon maturity. In addition to this journal entry under conditional sale, in addition to this one, upon maturity when the maker pays, ito yung additional entry natin. The previously credited notes receivable discounted accounts dun sa journal entries lang, dun sa journal entries, will be subsequently debited, then i-credit na mismo yung notes receivable to signify removal of the notes receivable from the records. So walang problema kapag conditional sale tapos nagbayad si maker at upon maturity. Ang problema kapag dishonor ang promissory note ni maker. Kasi anong mangyayari kapag dishonor? Maghahanap ka ng mga charges and other protest fee na idadagdag sa maturity value ng promissory note. Kasi ang gagawin dyan, the endorser or si Loud Company, si Loud Company will set up an accounts receivable account by the total of 3,432,000 na amount. Which is yung total nito, assuming ito yung amounts. This is just an extended assumption. So 3,421,600 plus 10,400, total niyan is 3,432,000. This 3,432,000 is the amount that Loud Company will be collecting from the maker due to the dishonor of promissory note upon maturity. Okay? Then credit tayo ng cash for the total amount of 3,432,000. Kasi yung amount na to is yun yung lahat ng amount na binayad natin kay Savings Bank. Okay? Kasi si Savings Bank hindi nabayaran ng maturity. And in order for Loud Company to pay Savings Bank, si Savings Bank kinulit niya si Loud Company. Okay? Then chinarjan pa niya si Loud Company ng protest fee. Okay? Ng protest fee. Oy, Loud Company, bayaran mo ako kasi hindi nagbayad si maker. Since kung hindi ka magbabayad ka sa akin ng additional 10,400. Okay? Since hindi nagbayad si maker, ikaw ang sisingilin pa kita ng protest fee na 10,400. So yung total na babayaran mo sa akin is 3,432,000. Which in return, the same amount yung sisingilin ni Loud Company doon sa maker. Okay? So therefore, si Loud Company, hindi lang 3,421,600 yung sisingilin sa maker. Plus din ang 10,400. Then after this entry ng setting up ng accounts receivable and paying cash, dun na magkakaroon ng additional entry ulit si loud company ng debit to notes receivable discounted and credit notes receivable. Okay? So yan. Kapag naman secured borrowing, almost the same lang yung journal entry, magkakaiba nga lang sa account na ide-debit. Kasi dito yung ide-debit kapag secured borrowing, yung liability on notes receivable discounted. Pattern yan dito kanina. Okay? So dito, liability talaga yung nirecognize natin. So meron tayong i-represent na liability on notes receivable discounted account sa FS. Okay? Sa balance sheet. Upon payment payment of the maturity value by the maker sa maturity date, simply debit lang ng liability on notes receivable discounted, then credit notes receivable. Okay? Pero kapag dinishonor ni maker, yung gagawin, set up muna ng accounts receivable account, bayaran si third party or kung dito si savings bank. Then afterwards, debit ka ulit ng liability on notes receivable discounted, then credit ka na ng notes receivable. Okay? So maraming process na pagdadaanan kapag with recourse. Okay? So kindly raise hand kung nahabol ako dyan. The last problem. Bonus problem. Okay. Kanina, yung problem natin, yung assumption natin sa problem is interest-bearing promissory note or interest-bearing notes receivable. This time, sample problem 2, the assumption is non-interest-bearing notes receivable. So, Quiet Company received a promissory note from Blur Company for merchandise sold amounting to 4,500,000. This time, yung date ng promissory note, March 1, 2019. Therefore, the transaction probably occurred also on March 1, 2019. The note is non-interest bearing and is maturing on November 30. So therefore, from March 1 to November 30, ilang months yan? Sige, tulungan ko kayong magbilang. March, April, May, June, July, August, September, October, November. Full month of March, full month of November. So ilang months ba? May nagsasabi ng 8, may nagsasabi ng 10, may nagsasabi ng 9. Majority ang 9. So ilang months? Okay. 9 months. Okay? So therefore, the maturity period of the non-interest bearing promissory note here is good for 9 months. Kanina, good for 12 months. Okay? Good for 12 months. Okay? Then, on June 1, 2019, the company decided to discount the note with Spend Bank to obtain additional funding. The discount rate effective of the bank is at 12%. Then use 30-day month counting. So ganun pa rin. In a year, 360 days yung assumption. Every month, meron tayong 30 days. The same pa rin yung requirement sa atin, net cash proceeds and loss on discounting. Sige. Okay. Kayo naman ang mag-solve. Magkano kaya ang ating number 1 muna, yung net cash proceeds. Using this journal ay yung format ng competition. Magkano kaya yung net cash proceed natin? Kindly have it in the chat box kung magkano yung na-compute yung net cash proceeds. Sige, start. Ay, okay, sorry. Yan. To. Sorry. Hala, Miss Kayla, bakit mababa masyado yung net cash proceed? O nakakaiba-iba sa net cash proceed. Sige. Sige, tulungan ko muna kayo. Sa maturity value, compute muna ang maturity value. Magkano maturity value natin? Magkano yung maturity value natin ng promissory note? Grabe naman, Loribel. Bakit ada? Si Angelique, bumaba ang kanyang yung kanyang maturity value. Yung kay Alina, 4.8. So kayo siya ng 4.8. Actually, sa net cash proceed, merong nang nakakorekt. Yun. Ang hirap basahin ng pangalan mo, Miss Efilu? Dames? How do I pronounce this one? Sige nga, hanapin ko to sa baka magkamali ako ng pronunciation. Den Efilu. Okay. So si Dens Efilu, yon. Correct yung assumption niya na 4,500,000 yung maturity value because non-interest bearing. Okay na. So sige. Naalala? Kayo naman, pinakita ko lang sa inyo yung solution format ko kanina. Compute agad kayo ng interest. Hindi agad tiningnan na non-interest bearing. Correct si Lorabel sa kanyang maturity value pero nagkamali sa net cash proceed. Actually, yung nakakorek sa net cash proceed si Mark. Si Mark Lovie de la Cruz. Ewan ko kung minagic niya yan. Basta yun yung sagot. Okay? Yan. So sige, punta na nga lang ako sa solution. Baka na pa kayo. Yan. Nakikita? Grabe ang sabi ni Kayla. Ni. Okay. So yan. Face value of the notes receivable equivalent sa maturity value natin. Take note ha, take note. Yung different type ng notes receivable. We have interest bearing and non-interest bearing. Yung non-interest bearing, sabi ko pa nga sa inyo, embedded na ho yung interest. So yung interest hindi na natin i-compute kasi nandun na sa 4,500,000. Yun nga lang, hindi natin alam kung magkano yung interest talagang kaakibat kasi naka-embed na agad. Okay? So yan. So diretso na natin i-multiply ang 4,500,000 by the discount rate. Then multiply by the period cover for discounting. Yung discounting natin is good for 180 days. Bakit 180 days? Balikan natin ang problem. Ayan. Yung date ng ating promissory note, March 1. Yung discounting natin, nasa June 1. So from June 1, okay, June 1 to November 30. Ilang months yan? June, July, August, September, October, November. 6 months. Bakit? 6 or 7? Oh, June 1. June 1, June, July, August, September, October, November. Kayla, November lang tayo. November lang. Okay lang yan, okay lang yan. So 6 months. Okay, 6 months ha. 6 months. So that's why 6 times 30 days, ilang days yan? Lahat-lahat. Yun. 180. Ayan. Okay? Kaya 180 over 360. Or kung gusto nyo, you have it 6 over 12. Okay? So tanong, yung carrying value, correct ba yan? Eh wala namang ibang value na ibinigay sa atin dito. Since non-interest bearing, yung carrying value natin equal na sa 4,500,000. Hindi naman inamortize. Short term ano lang naman siya, short term promissory note. So wag na i-amortize. So diretso na agad. Pero kung ina-amortize pa yan, yung i-recognize natin na carrying value, yung nasa amortization schedule. Pero since ito hindi siya ina-amortize, yan. Diretso na 4,500,000. Then get the difference, 270,000. Sir, tama ba na yung amount ng discount and amount ng difference ng net cash proceeds and carrying value is the same? Oops. Wag agad. Kasi dito yung discount, sir, oh. Yung discount, sir, 270. Tapos yung difference nila na pwede natin sabihing loss, 270 din. Pwede ba yon? Absolute ba yan? Yes or no? Sagot. Yes or no? Okay. So, hindi makapag-decide. The answer is no or yes. Joke lang. Yung sagot, no. Hindi yan absolute. Kasi dito, coincidentally, naging the same sila because short term ang promissory note na non-interest bearing. Pero kung long-term promissory note yan, yun, mag-iiba yung difference o yung potential amount of loss doon sa amount ng discount. Okay ha? Wag palaging mga absolute assumption ha, wala yan sa accounting. So, sige, how do we journalize? The same pa rin, pag absolute sale, debit ng cash for 4,230,000, debit ng loss on discounting 270,000. Bakit loss on discounting? Kasi sale. Pag conditional sale, debit tayo ng cash 4,230,000, debit ng loss on discounting 270,000. Then credit na lang tayo, assume na lang natin yung amount na, yung account na to for journal entry purposes. Notes receivable discounted. Okay? So loss on discounting, bakit siya loss? Kasi nga sale, conditional sale. Pag secured borrowing naman, debit ng cash 4,230,000. I-credit natin yung mismong liability. Okay? Mismong liability na liability on notes receivable discounted. Actual obligation yan. Pero yung debit natin is interest expense. Reason for interest expense, kasi nga borrowing ang assumption. So since borrowing, 270,000 interest expense. Okay, so kindly raise hand if nahabol yon. Okay. So ayun ha mga kapatid, huwag agad magpapadala sa bugso ng damdamin kasi nga nakita ang solution format ni sir. Okay? Yun, may total interest complete tayo. Tatatatak. Maturity value, mali. Okay? Kasi non-interest bearing tayo. Pero kung interest bearing, you can add interest doon sa face value. But because non-interest bearing, face value is already equal to maturity value. Don't worry guys, kasi nung nasa kalagayan niyo pa ako, nagkamali din ako. Yung tipong confident ako sa sagot ko. Sir! Okay, mali. Mr. Gabon. Wow. Yun lang. Namali tayo dyan. So I hope you were able to get the difference ng mga assumptions natin sa discounting. Okay? Ay, oo, sorry. Nag-attendance na ba kayo? Hindi ko na malayan. Ay, oo. Nag-attendance na pala kayo. Ayan, sorry, hindi ako nagpo-post kanina. Sige lang, okay lang yan. So, sa mga hindi pa nag-attendance, kindly signify na lang your attendance. Yan. So, that concludes our discussion for receivable financing. On Monday, yun yung ating final exam. So take note ha, baka ma-encounter nyo yan sa problem solving. Take note yan. So wag kayong mag-alala, madali lang ang exam. Madali lang ang exam. Yung tanong ko sa maniwala kayo sa hindi, yung tanong ko lang yung tanong ko lang sa receivable financing is suspense na, doon na sa exam. Doon na sa exam. Baka ma-excite kayo eh. Sir naman, handa na kami sa labungin yung question. Tapos hindi. Ikaw talaga, sir.